Hello everybody, welcome to tonight's live stream. Let's go over Bitcoin, shall we? So, we had quite the upward push recently, and we did break above my designated resistance line. Let's go over that resistance line now, shall we? So first we're going to load up ACAT here on the 4-hour chart. Oh man, a full day full of Blender hotkeys and I forget what I'm doing. I was waiting for that to load up. It should just take a second. All right. So previously we defined our supports with these lines, and we used a condition where we said 8,000 is the last resistance. If we go above 8,000, then we're in trend. This caused expansion. Okay, with that expansion, we tested down on the trend relevant pivot, which ACAT with charts and I stated that if it bounces, which it did, it was retrospect, so we were talking about it around here. We said trend is still valid and you should expect further upside as long as we are above this pivot. Lo and behold, we have stayed above this pivot, and our condition was you should just kind of stay long until one of two things happen. One, you tag the 3.2 standard deviation of the long still expanded period, which is this squiggly line here. So when we tagged this, that was your opportunity to take profit. All right. Now it's liable to just taper down, compress. All right. I wouldn't be surprised if we just went sideways, slight downward trickle for more compression. Okay. So in these kinds of scenarios, here's what happens. You can't just keep pushing up parabolically at the 3.2 standard deviation. It would require an excessive amount of force. Not saying that someone isn't going to come in and do that. I'm just saying it's very unlikely for it to be all applied at the exact same time, right? Why pay $5 for a hot dog now when you can pay $2 for a hot dog in 5 minutes? Right? It's the same concept, right? You get the same result by pushing volume upwards if you just wait a little bit for everything to cool down, right? Supply and demand. So think about this. Let's go back to the hot dog analogy, okay? You are at a farmer's market, okay? And you go prime time Friday afternoon, everybody's at the farmer's market, and corn is selling for $10 a cob, all right? That's where Bitcoin is, $10 a cob, baby, right here. So it's really busy. They have reasons to sell that high. All you have to do is wait for the commotion to settle down. Suddenly it's Sunday afternoon. The guy with the corn still has some stock, but less people want to buy, less people want to sell. So what happens? He reduces the price of the corn, right? That's compression. It's less volatile because there is less input in the market. When you have less input, it's less movement. So, a lot of input right now. A lot of input means a lot of volatility. All right? And your farmer's market is full. You're not going to bet that the entire bus load of children from every single school all around the world is going to get on buses and come to your farmer's market right now and start buying even more corn and driving the price up even higher. No, it's not logical. Sure, it could happen. You get some crazy rich dude who comes and buys everything right now, despite corn being $10. I already do that. Corn's going to be $2 tomorrow. All right? Wait for the $2 corn. Price is either going to go sideways, trickle downwards. It's going to meet up with this pivot here. All right? Either which time it will bounce off. Okay, watch. Let's just use a trend line. Okay? Roughly that. Price is going to do one of two things. It's going to trend down. It's going to go sideways. All right? At these two locations, Bitcoin's going to have to make a decision. One, trend continuation. Two, trend failure and mean reversion. Mean reversion is compression. All right? All right? So think about this. If long-term compression happens by entering this band, farmer market closes. It doesn't open until next weekend. All right? That's what it means. If this happens, there's going to be no volatility because there's going to be very little volume, and you're just going to have compressionary lateral trading until you see all this blue and green here? That's a farmer's market opening. This is a farmer's market opening. When you have these large blue and green swaths, that's high potential energy. High potential energy means there's a lot of customers who are going to come and do some shopping. Doesn't mean they have to buy anything, right? It's open all here. People don't start buying until this location. Then price goes running crazy, right? The market fervor, trend. It's like, oh, I guess corn's hot right now. I got to go get myself some corn. And things get out of hand. And until people say, I don't want to buy corn at $10, you're out of your goddamn mind. So, just wait. You want to take short-term profit, do so. I wouldn't recommend shorting this because you can still just go sideways and then up. Seriously. Don't short right now. Bad idea. You can short when you cross inside the mean reversion condition. That'd be cool. But don't short before. No, don't bet against trend. Because we have a way to define trend quite accurately. And when trend is over, then you can short, right? You want confluence of signals. And I don't think you'd be shorting at all, really. I'll show you why. It's my favorite signal right now. In fact, it's just one of my favorite signals ever. Just all around. It's what I use the most often to define crazy trends. All right. Whenever you get the farmer's market opening up on the daily chart, like it did in these three locations, where everything is below 0.7 on the wave PM, like here, 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 what happens? Extreme volatility. Extreme volatility. And the beginnings of extreme volatility. Oh my. What could this mean? It could mean long-term trend. I would bet on it. I'm betting on long-term trend. And you might say, oh, but Dad Shark, the long-term trend is down. Look at that. Look at that trend line. Well, I gotta break it. Even just the most basic point analysis, that's a breakout of the trend line. And a lot of dumb money is going to be following that. So if you have dumb money entering the market because of a dumb signal, but it is supported by good fundamentals and excellent signals, then yeah, I'm going to bet with the dumb money. Of course, that just means we have to be careful on the shorter time frame, right? Mean reversion pivot, we know when to sell. You gotta sell on that mean reversion pivot. All right, simple as that. All right, that's the live stream. I have somebody said something. Let's check it out. It's okay. It's about my dice on Discord. We're good. I'm done. Goodbye. All right. Let's check out YouTube. No comments. All right, that's good. Good night.